105.7 Light FM. John Cougar Mellencamp there. Good morning. I'm up to 79 degrees now. Boy, it's getting warm fast before it rains. It's 8:41 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It's 8:41, and it's time to check in and find out what's going on Wall Street with the good eyes of Philip Statler of Statler Financial Services in downtown Sebring. Philip, good morning. Another party day on Wall Street yesterday, wasn't it?
Yeah, it was for the most part, Dave. Green ink across most of the indexes. The Russell just couldn't quite get there. It was basically flat, down 60 cents. So, but everything else was up green, and like I said, it was a lot of them were barely green, Dave.
It really was. Yeah, it was a small change, but it was enough to do it. Yeah, the Russell was down 0.02%, which was about as close to flat as you can get. Dow was up another 183 points yesterday. Standard & Poor's only up $1.24, but that was enough to set another new record. NASDAQ up 18.5. And that, again, was enough to set a new record. I never thought I'd find myself saying, boy, we're not at a new record on the Dow, and it's at 50,644. The NASDAQ with a new record at 26,674. I mean, talking about nosebleed territory, I need a new adjective for that. It's gotten almost silly, hasn't it?
Yeah, it has. And it's been a continued conversation we've been having with our clients. It's like, okay, what's it going to take, right, to see some correction hit the marketplace as we've hit these new records and new records and new records. At some point, it's got to pause, and there's going to be some geopolitical event that's going to cause that. And you would have thought the Iran deal would have caused it, but it hasn't, Dave.
No, I mean, it just caused a hiccup at the beginning of the bombing, and that was pretty close to about all that ended up happening. One of the major brokerage firms put out a statement today that the current run-up in tech stocks is, quote, dwarfing the 2000 bubble that we had with tech stocks, and it's kind of looking like it because we go from one favored tech category to another. We get tired of software, okay, fine, then we buy the big manufacturers. We get tired of the big guys because they're spending too much on CapEx, and we go crazy on the chip stocks. There's one hot topic or another in the tech industry that just always seems to be capable of driving the overall index up, and it's giving us multiples that are pretty close to indefensible, and it's really hard for me because I'm a born optimist on categories like that, but I mean, they're starting to approach the indefensible level, aren't they?
They are, Dave. And so, at some point, we know that the correction will come. We just don't know when, and we kind of got to be prepared for it.
Yep, and how big the correction is makes a difference, too. That old number about 10% being the definition of a correction, you get down 10% off of a 50,000 Dow, and you're talking about a basically 5,100-point drop, which is pretty much enough to make a few people want to jump out of windows. We start this morning out with a whole slew of government data dump. First of all, probably the least exciting one of the bunch is unemployment claims. Only had 215,000 first-time unemployment claims last week, which again stays in the inordinately low level. But the big numbers were personal consumption expenditures inflation, year over year, core PCE. That's the stuff that doesn't go down once it ratchets up because it gets rid of food and energy. Annualized 3.3%. Now, you had the month-by-month number, but I looked at the top line, pretty much dropped my false teeth and stopped there.
Yeah, we did see basically came in a little less than expected. The PC monthly April came at 0.4. The expectation was 0.5, and that's definitely lower than March's 0.7. So kind of the same story on the core PCE. It was up 0.2. Expectation was 0.3, which is what it was in the month of March. So, lower than expectations, but the annual number has increased from what the annual number was in March.
That's an interesting bit of arithmetic. If the month-by-month number is less than expected, but the annual number is more than expected, my pocket calculator just sprung a spring. Leave it to government math. But yeah, no doubt. Look at 3.8% top line, 3.3% core numbers, and we're not even in the same zip code as the 2% the Federal Reserve has always tried to target. And then we get to the gross domestic product. It's a second reading on the second quarter, isn't it?
Yeah, it is. It's the second reading on the first quarter. First quarter. Second reading, first quarter.
Okay, paltry 1.6% growth. I didn't know whether that was what was expected or not, but it certainly isn't what I'd like to see, is it?
No, the expectation was for it to still be around 2%. So obviously we didn't hit that number.
And poop. Now you hold that up against the notion of the personal income, because they also released that. And personal income last month, dead flat even. I haven't seen a goose egg on any macro number like that, an absolute zero, in a long, long time. And then you put that up against personal spending, and you mentioned you saw that actually went up.
Yeah, personal spending went up 0.5%, Dave. I mean, no increase in income. Personal spending went up. How'd they pay for it? How we pay for things? Well, you and I agree. Plastic was the deal.
Yep, we're going further into debt while we're at it in the process. So inflation's too dang high. We're not making any more money. We're spending more money, and it ain't looking like it's improving. And now all of a sudden, the big brokerage houses have suddenly discovered there's another part of inflation. We've been living on gas prices and worrying about them so much. They finally noticed that grocery prices are rising, and that provided the headline for one of my tip sheets this week. You take the energy shock, and then you get to the point of add in some tariffs, cattle shortages, and difficult weather with the El Nino coming. That's not going to help the weather up in the Midwest. And the projection is that grocery prices are now going to start looking like gas prices between now and the end of the year. Doesn't that just give you a warm, fuzzy feeling all over?
Oh, it just makes me so excited, Dave. I was listening to CNBC a little bit this morning, and they were talking to an oil gas expert, and basically said, our inventories are good until about the end of June. And then we're going to have a problem. And so that really starts to give some rise to some concerns about summer travel and the possibility that, based on the inventories we're seeing now and the fuel, that could there possibly be some shortages coming?
That's a scary thought, because mostly we're independent and can produce what we use, but we use more during the summer, and that's not good news either. By and large, and the Iran situation, Iran is now saying we're very close to a deal to reopen the Strait of Hormuz. Iran is throwing out the hearts and the flowers, and our administration is saying we're not as close as they say. So it's almost a juxtaposition there in terms of whether or not we're close, which I kind of take a smooth average and say we ain't gone nowhere in the last 48 hours as far as settlement in Iran.
Yeah, I'd agree.
Like I said, I believe in smooth averages. Until the two sides say the same darn thing, I don't believe any of it. We are still doing earnings season, and we're kind of winding down, obviously, but there's a couple of household names that came out overnight. I didn't hear how they did, but they're one of my favorite stores to watch because their marketing position has always been kind of iffy, sandwiched between Walmart and the big department stores that are at full price. How did Kohl's come out this quarter?
Kohl's better than expected. They still lost money, which always amazes me that your stock can go up when you still lose money. But they lost 13 cents. That was better than the 19 cents they were expected to lose. And revenue came in basically in line with what everybody thought it would. But get this, Dave, that's got Kohl's up almost 18% this morning.
Crud.
Yeah.
I gotta lose more money around here. It'll mean job security.
Hey, on the other side, I got some other retail stuff. Dollar Tree reported as well. They they beat on their earnings and revenue number above expectations. They did have some adjustments in their reporting for the current quarter, and they're just off to the races today, Dave. They're up, daggum, almost 19% this morning.
I'm hearing big moves all morning. Is one going down?
Well, I'm trying to see. I don't see any retail that is going down. I mean, even Best Buy is up this morning on its news. It's up almost 10%.
Wow.
I did have one. I did see one. Burlington. Burlington was falling earlier. Is it still falling? Yes, it's falling. So Burlington Stores is down a little over, well, almost 3.75%. They beat on the first quarter financial numbers, but their guidance had some issues in it. So that caused them to kind of fall apart there. A little tidbit before we kind of close out is Caesars Entertainment got an offer to go private. Yep, they're going private.
Woo.
Ferretta Entertainment is buying them out. Now, Ferretta is the one that owns the Golden Nugget in Las Vegas. They own the NBA Houston. Is it Rockets? Houston Rockets.
I think so.
They own the Landry's seafood chain, and they're buying Caesars Entertainment for a total deal of $17.6 billion, and about a little over $5 billion of that is in cash.
They better convert the buffet at Caesars to seafood in order to get some symbiosis and make that money back somehow. Huh? Wow. Resetting the table. It was an up day yesterday on Wall Street. Not an exciting up day on everybody but the Dow, but it was up for the most part. 45 minutes before we go this morning. What are we looking at so far today?
Dave, we're seeing some improvement because earlier it was all red, and we've actually got some green in there now. Yes, the Dow Jones is still red by $59. The S&P 500 is up $2.30. NASDAQ 100 is up $22. The Russell 2000 is flat right now. On the other side, we got silver back down 1.1, gold down 0.75%, and crude oil has crossed back over 90, up 2% to $90.47 a barrel.
I liked it a lot better at 88. Of course, I'd rather see 60, but I'm not on drugs at the moment. Let's see. Looking across the ponds, the Asian Rim was a weird market this morning. Everybody was off except for the mainland Chinese indexes. On average, they were up by about 0.5%, averaging across the two of them, but everybody else got negative. European indexes almost all down this morning, not catastrophically, but everybody but Italy is down for some reason. We're looking at down by about 0.75% on average across the European community halfway through their trading day. Getting my retirement plans together? I need help. I need a plan. How do I find you to get a plan together?
Then give us a call at 863-382-0037. Love to spend 30 minutes on the phone with them. Folks, making sure that you've got the right plan for the retirement you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back together again tomorrow morning to tell everybody what happened here today. I appreciate it, my friend. Have a good day, and we'll see you tomorrow.
All right, man. Take care.
Be well. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week is going well. Join us again tomorrow as we close out this final week of May.